Your entire financial world is about to be shaken to its core. In the next 90 days, maybe even sooner, the biggest financial earthquake since 2008 is going to hit, and it's coming from the one place you least expect, the US debt ceiling. Forget the usual market fluctuations. What's coming isn't just about stocks or bonds. We're talking about a global asset collapse that will wipe out trillions. But here's the shocking truth. While 99% of people are losing everything, you could be positioned to buy the dip of a lifetime and emerge wealthier than ever before. This isn't theory. This is a final warning. This is your last chance to prepare. I'm going to break down exactly why July 2025 is the deadline that will redefine your financial future, and how you can turn impending disaster into unprecedented profit. Mark your calendars. The end of June 2025. That's the critical date. Why? Because the US is facing a $6.5 trillion debt maturity in July. This isn't just a big number, it's a ticking time bomb. You might think, so what? It's just US debt. You're dead wrong. Most people have no idea how catastrophic this is. The US borrowed this money at nearly zero interest during the pandemic. Now their treasury is almost empty, and they need to borrow new money to pay off old money. But interest rates are now 4.5%. Think of it like this. I lent you $1 million 5 years ago. No interest. Now I want it back, but you're broke. So you borrow from someone else. Only now that new loan comes with a 4.5% annual interest rate. Over 5 years, that's an extra $200,000 you owe. The US government is about to do this on a $6.5 trillion scale. They're swapping cheap debt for incredibly expensive debt. And here's the kicker. Who's going to lend the money now?
For decades, US Treasury bonds were considered the safest asset on Earth, a risk-free investment. People bought them because they always went up. You put in $1 million, get a piece of paper, and sell it for $1.1 million a few months later. Many leveraged 5 to 6 times, turning $1 million into $5 to $6 million in bonds. Can't lose, they thought. Look at this chart. From May 2020, US bond prices have been in a free fall. The entire 6-year gain wiped out in 3 years. Why? Because countries like China and Japan are dumping US bonds. Banks are collapsing because they're holding these losing bonds. So, would you buy US bonds now? The US Treasury is running dry. They need to borrow at 4.5% interest. But who's still buying this burning house? This isn't just about the US. This is a global contagion.
What happens if the US can't repay? They default. Your US bonds become worthless paper. The entire world dumps the dollar. It's like your bank suddenly declaring bankruptcy. You'd pull your money out immediately. The dollar, currently backed by these bonds, becomes a worthless piece of paper. Global assets in USD vanish. So the Federal Reserve, the Fed, has to intervene. They have to print money. It's not a question of if, but how. The capitalists behind the Fed won't let their wealth turn to dust. They've already stopped quantitative tightening. The next step is quantitative easing, printing money, flooding the market. But here's where it gets brutal. The Fed has 2 choices. 1. Print money, buy bonds, but keep interest rates high, 4.5%. This sounds innocent, right? But the US government would be paying billions in interest to the Fed and the short-term bondholders. American citizens' taxes go straight to paying interest to powerful capitalists. This high interest rate would crush businesses, lead to mass unemployment and spiral the economy into a deep recession, collapsing stocks and bonds. 2. Let the whole house burn down. Let the U.S. bonds collapse, stocks collapse, and the dollar follow. Why? To force the Fed to print money at a massive scale and drop interest rates to nearly 0%. Because when the market is in freefall, a slow or weak response won't save it. This trigger could be the global tariffs set to reactivate in July. No matter which path the Fed chooses, the outcome for U.S. assets is the same: a massive, unprecedented dive. Every collapse is a wealth redistribution event. 2008. Some jumped from buildings. Others bought the dip and became billionaires. 2020 pandemic. Retail investors lost everything. Hedge funds tripled their money. This coming crisis is your last chance to climb the social ladder. Why do most people lose? They blindly buy the dip too early, or panic sell at the bottom, or stubbornly hold as their wealth evaporates. They miss both the crash and the rebound. If you're still brainwashed by buy and hold forever, this era will crush your assets. You must learn to identify the top before the market collapses to lock in profits. You must be ready to pivot when the trend reverses. Look at the signals. U.S. stocks, bonds, and the dollar are falling. Gold is soaring. Is this part of a pre-planned script? Here's how the masters play this game, and how you can too. Step 1. Devalue the dollar to pay off debt. If the dollar loses 10% value, that $6.5 trillion debt effectively shrinks by $650 billion. The U.S. needs another stock market crash, or two, before July to drive the dollar even lower. Step 2. Pump gold. When the dollar falls, other currencies strengthen. But if gold soars, all currencies lose value relative to gold. The U.S. holds over 8,000 tons of gold, plus another 7,000 tons of foreign gold. A rising gold price makes U.S. assets more valuable, cushioning the dollar's fall. Step 3. Trigger global collapse via tariffs and redirect capital. Remember the tariffs delayed until July? After the U.S. debt is handled in June, expect the tariffs to kick in. This will trigger another global asset and currency collapse. Then the Fed steps in, prints money, buys assets, and drops interest rates to 0. This will drive capital from gold back into U.S. stocks and bonds, allowing U.S. assets to recover violently. Step 4. Buy the world on sale. U.S. capitalists will take their inflated dollars and buy up distressed assets globally at rock-bottom prices. This is how they tear down the old house and build a new one, owning more than ever. You might think this is just speculation, but look at history. Before 2008 and 2020 crashes, the dollar fell. After the Fed printed money and dropped rates, the dollar soared. Why? Because smart money sells U.S. assets, moves money overseas, inflates bubbles elsewhere. Then, when U.S. assets are dirt cheap, they return. The Fed saves the market, and foreign capital is forced to flow back into the booming U.S. market, buying up dollars and U.S. assets. If history is repeating itself, and your gold and yen or other safe haven assets have been soaring while the dollar falls, then your strategy for the first half of this game was correct. Now for the second half. Observe June and July. Will the U.S. pay its debt? Will another global crash happen? If it does, you'll sell your overvalued gold and yen, convert to dollars, and wait for the Fed to print money and drop rates. Then buy U.S. assets at the bottom. And even if this crisis doesn't happen, what have you lost? Nothing.
You simply reallocate your portfolio. The time to prepare is now. Don't wait until the crash hits and ask, should I buy now? Am I stuck? Opportunities like this come once in a decade. The world is getting more volatile. I share free, actionable insights on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss your shot, subscribe to my channel, hit the notification bell, and share this video widely. And if you're worried you'll forget these critical steps, hit the like button now. It'll save this video to your playlist so you can easily come back and execute this plan. Your financial freedom depends on what you do in the next 90 days. Are you ready to seize it? See you in the next video.